S&P, the stock market, lost over 100 points on Friday. There's a bit of uneasiness. We see traders worrying if the stock market S&P 500 continues down all the way to the level of 5,500 and below. What I'm here to tell you is we are in the process of a regular correction and likely not a very severe one at that. Zooming out, those who have been following the channel know that S&P 500, the stock market, generally follows these intermediate cycles, which usually last for around half a year. Within those intermediate cycles, we have daily cycles, which usually last for around a couple of months. Of course, those durations can either stretch to as long as 3 months or be a little bit shortened. The previous intermediate cycle correction was in the middle of January. Since then, both the daily as well as the intermediate cycles are around 39 trading days old. And with average duration of around a couple of months for these daily cycles, it's only natural that this daily cycle is going to decline down into this temporary, not a very severe daily cycle low, followed by a bit of a bounce into the second daily cycle of this ongoing, relatively young intermediate cycle. On the downside, we want to see this price break down below the Bollinger Bands, which are probably going to widen a little bit over the next couple of weeks. And we're likely going to see S&P 500 close this gap around 5,880, because historically, most gaps do get filled. Having filled that gap, there will be some support around 5870 on S&P 500. Next, looking at market sentiment, one measure of market sentiment is this optimism index. Looking at what happened during the beginning of 2025, after a bounce from that intermediate cycle low, yes, market sentiment has reached this red line, but given the average duration of those intermediate cycles, and as we are still in the first daily cycle of this new intermediate cycle, we're likely going to break above the red line on this market optimism index into the top of the second daily cycle. Hence, again, this ongoing correction is likely going to be a temporary one lasting for 2 to 3 weeks during this daily cycle correction. So in the intermediate cycle going over into the next 2 to 3 months, I still do expect higher highs on the S&P 500. Again, as I mentioned, into the top of the intermediate cycle, perhaps in the second or the third daily cycle of this ongoing intermediate cycle. The longer term view, though, is perhaps a little bit more interesting. Might we witness something similar to what happened during 2021, where we see optimism index show negative divergence with higher lows versus higher highs on S&P 500? Something similar has been going on all through 2024. Where into the middle of 2022, we see a serious spike in optimism index just as the last inexperienced trader piles in before that drop down into this longer term 4-year cycle low. Are we going to experience something similar over the next half a year or so? Time will show, but if we do see a significant spike in market sentiment, exercising some caution in that case near those cycle tops wouldn't be a bad idea. After all, looking at these longer term 4-year cycles, this is SPY ETF, going back to, let's say, that dot-com bubble around 1998-2000, we see several of these longer term cycles on average lasting for around 4 years. Some of those, of course, were stretched far beyond that, as the one finishing with the global financial crisis, and the others lasting for much shorter than that, as between 2009 and 2012, balancing out the average duration into around 4 years. So if in the next half a year or so we do see another spike into significantly higher highs with much higher market optimism, that might be indicating a bit of a cycle top from this longer term perspective, with the potential to correct for almost a whole year or maybe even longer than that. In the immediate term though, while the daily cycle is getting a little old here and it's dropping down into its daily cycle low, the intermediate cycle is still relatively young. Those last for around half a year, as I mentioned, so you wouldn't usually expect a peak within the first 4 weeks of that intermediate cycle. meaning that after this ongoing temporary weakness, we're likely going to see higher highs into the second daily cycle of this ongoing intermediate cycle. For much more details on the stock market as well as precious metals, make sure to join us at myfinanceteacher.org, where we discuss a couple dozen most promising juniors, Goliath Resources, for example, more than tripling in share price over the last several weeks, while myfinanceteacher.org has been recommending Goliath at around the share price of just over 60 cents. Last week it reached $2. So make sure to join us for more on those explosive juniors. Have a marvelous Monday. Bye-bye.